Patrick, welcome back to the show. Last time you were on, you blew my mind because we looked at so many different angles and got so many different data points. And we kind of were able to prove that there's this amazing long-term storm brewing, right? If we just look at the pricing of all the different macro elements like the dollar and rates and everything. And I just wanted to have you back on to talk about where you think we're going next.
Yeah, it's awesome there to catch up again and see how things have evolved, right? Because since big picture, right? Like my charts, monthly, quarterly candle charts, so they take time to evolve.
You do.
And touching base like many months later, it's awesome there to see if like my thesis is they completely crumbled or it's still building towards.
Exactly. I think we're like 1/4 away from where we were last time we talked or something like that. So we'll see how it changed. And, I love your new website, northstarbadcharts.com. I'm a member and getting those daily charts is super helpful and awesome. So I've just started looking at some of those. So I wanted to ask you about a few of those.
Awesome.
Yeah.
Sure. Let's look at them and show the insides of the website there. It'd be a pleasure.
Yeah, great. So yeah, the first one, I think it's the most important one actually, because it's the interest rate charts. I love that you look at that because it's kind of the oxygen of economics, right? Everything is based on interest rates. So just looking at the long-term real rates chart, what are you seeing kind of there?
Yeah, so I did that chart not too long ago because it's back in late 2020. I was really looking at that chart, and gold and silver, especially gold, had really started moving upwards when those real rates. So that's the 30-year real rates. So it's those 30-year real yields adjusted for inflation, so they're real. And as soon they were dropping, and gold was really sensing and reacting to that, dropping along with it. And then I just had the channel was going downwards, and I was doing estimates that if the channel broke down and kept going downwards, then I could try to do some projected moves for silver and gold.
Right.
But what happened after when those real rates bottomed there, I think in December, they just went sideways and they actually climbed back up. And then that's when you have to adapt, right? So that huge descending trend line had multiple touches, 1, 2, 3, 4, like 8, 9 touches. As soon as that broke up, then within that descending long-term channel, we started creating an upwards channel. And now we're hitting, you always want to see, okay, where's my next resistance? Is this channel going to resume? Is it going to expand and then keep resuming it downwards, or this is it? And just to look at the clues, I put like an indicator. So at the bottom, I put the MACD, and I saw that the MACD was already started to turn around on that weekly chart. And I always look like for bearish divergence, or what I call like hidden bearish divergence. So the indicator is creating a new high, but the price action from those two peaks failed to make a new high. So that means there's weakness in the price action. So while the indicator was going upwards, the price action refused to make a new high. So we call that bearish divergence, usually hidden bearish divergence. And usually you see that when there's a resumption of ongoing downtrend. So that's giving me clues that right now the weekly chart for real rates, they seem to want to go back down to test at least that pivot line. So there's a breakdown line where I have that little move arrow. So that's a pivot line. So it was tested on the top once, tested on the bottom a few times. So it looks like real long-term real rates, they want to test that. And if that fails, then the target would probably be the median line. So test that more important long-term median line, which used to be support, and now it's going to be resistance. And I'm just trying to triangulate a little bit of where that could happen. And the target would be like a negative 0.56% on the 30-year real rate. And right now it's just below zero. So that's definitely going to be fuel for gold. Gold can also go up with these real rates. So at the beginning, when you're zoomed in here and you see these correlations on the shorter term, because this, even if it's like 4 or 5 years of data, there's periods in the past, in the 70s and early 2000s, where even if those real rates were going up, gold was tracking it to perfection, going upwards, because there's I've noticed there's like other drivers for gold. So at those periods where gold was going up with these long-term real rates, while the DXY was taking a hit, it was tumbling down, you know?
Yeah, and if you look at the last time the MACD did that cross, it just plummeted when it did that exact same pattern. So could we pretend? Well, that would take us negative, wouldn't it? Wouldn't it?
Well, right
Yeah,
now we're barely negative, and you're right. The fractal is almost the same, Elliot. If
yeah,
you take the way that the rates spiked up and then they started dwindling down there from
yeah.
the previous MACD cross, I always love like doing examples from the past, how the previous instrument behaved. And
Mhm.
you're right. This is it looks like we're gonna go for one more road down the negative real rates, man, and at least go test those previous lows we had in December or whenever they bottomed, and then go at least test that. It's gonna be a wild ride for sure.
Absolutely, and that is, like you were saying, good for gold and precious metals, right? Because it means inflation's picking up essentially, right? And that's good for the inflation hedges.
Exactly.
So just with that in mind, right, that kind of macro framework, you did this absolutely, like I'm a huge fan of this parabolic analysis because you looked at, the Nasdaq, right, for instance, and this is just unbelievable because anyone who looks at this Nasdaq chart should say, yeah, we're clearly in this bubble that has to correct because I don't think we've ever seen a chart like this really continue higher, right? Um,
Well,
yeah, what do you think of this?
well, this one's kind of tricky because the first thing when you look at a chart, it's the scale, and I made on purpose. I put the linear scale, but we know the Nasdaq, it moves logarithmically. Money supply is being debased logarithmically, but because when you're on a linear chart, since the price action is not moving like from $1 to $2 to $3, it's actually moving from 1% to 2%. It's like doubling, or maybe what's the analogy? Yeah, so it's moving for that same period of time. It's not moving like $10, $10. It's like moving $10 and then 100 and then 1,000.
Yeah,
So whatever you see on the right hand of the scale on the chart is always going to look crazy. It's going to look, oh man, this has to crash. But those type of slopes, we had it in 2000, and we probably had them before. So the takeaway from that chart is, yeah, the Nasdaq. Look, I know some. I don't know when it's going to crash. This thing could keep going up even more vertical.
yeah,
But the lesson is, once we start going down, once we have a 70% or 80% market crash, like a reverse symmetry move, like you see in this 1996, it went up or 1998, it went up at a specific angle going up. Once it crashed, usually it's going to be pretty much the same angle of descent. If we reproduce, as soon as the Nasdaq starts reproducing that and starts correcting for a 10% correction, becomes a 20 and then a 30, and then it gets to like, let's 70% or more, it's almost game over for many years, or usually it's a multiple of time. So let's say the cycle was 6 years to go up and down, then it's going to take maybe at least 3 times as much time to recuperate to break even. Even from the bottoms, I'm not measuring from top to top, just from the bottom of that correction, just to get back all the way to that previous high. You see, the Nasdaq took 14 years. There's a lot of technical damage when that happens. A lot of people that they're moving away, they want to look at something else, another asset. There's probably macro fundamentals that happen, why that crash happened, that people have already like started putting their money maybe in gold and silver or hard assets.
yeah,
And the overhead resistance, right? It takes time because all these people that bought, as soon as there's a rally, they want to break even, right? Oh man, it got up 20%. Okay, I'm out. And that's gonna damper.
yeah.
So over time, a correction is either price correction and time, or both. So over time, the people that bought in the 2000s, in 98, 99, they're not there anymore. They took tax losses, or for whatever reason they sold, and then the price action's able to float back up. So
Right.
that's pretty much the lesson. When you see a chart that goes up, even on the linear scale goes up, and then corrects 70, 80% in that reverse symmetry move, man, hope's not gonna help you, man. Time's gonna help you.
Right, absolutely. That's really good to know. So yeah, once these things do move parabolic like that, the backlash against it is is just absolutely devastating. It's actually interesting if you think about the psychology, because it's almost designed to screw as many people as possible, right? Because people get all excited here, right? In the 2000 bubble, everyone got excited, but then everyone got completely creamed and had to sit on their losses for, like you said, 14 years essentially, and then it goes up. Like it just,
Yeah.
and people are going to get all excited here too.
Same thing. History repeats, and this is nominal. So this is not even adjusted for inflation. So every year, even though you lost 1 or 2% every year for whatever the CPI was or the inflation rate. So adjusted for inflation, it's probably took maybe a few more years, to get break even.
Yeah.
And so that same thing for the move that's happening now. Let's say it started in 2016. We started going like, let's say, parabolic. So 16. I don't know when it's gonna pop, but everybody wants to know when this thing's gonna pop, man. But it's
Yeah.
probably when I decide to get bullish on the Nasdaq, thinking it's actually different. That's probably when it's gonna pop.
Well, what's really scary for me is if you look at the Venezuelan stock market in the hyperinflation terms that they've been dealing with, it's straight up. Like it never went down. So that's why it's scary, because yes, this could actually go up if America is in a very inflationary environment.
Yeah.
It could go up forever almost. So it's almost like it wrecks the expected patterns. It's crazy.
So yeah, so I think like more and more, since inflation, if it's picking up and it's picking up, we should more and more measure the charts divided by inflation to see the real, like when there's practically no inflation or it's flat. That's why we're able to look at nominal charts and they give interesting information. But you're right, as inflation picks up, we always have to divide either by gold or by silver or divide by the inflation rate to see remove the illusion, right? Remove that illusion that, hey, the stock market's going up. But yeah, you're totally right, man. I think I'm going to start maybe adjusting for inflation a lot more in my charts going forward.
Well, that's what I love about a lot of your charts, because you do actually compare it on a relative basis to other types of, other assets. And like for instance, if we just look at silver, right? So you have these incredible comparisons, silver versus Nasdaq, and it looks like right now we're at the very bottom, right? So on a relative basis, it looks like silver is totally undervalued compared to Nasdaq, right?
Yeah, it's like, if I could teach a lesson, to the most important lesson is when you look, you're about to put money in an asset, you have to know if you're at a high risk or low risk versus the reward. And these racial charts, they help you situate you versus another asset class. So you could see if there's a turnaround in that ratio. Here, I put the stock RSI at the bottom. These are semestrial candles. So this is really long-term stuff. So this is 6-month closes. And the stock RSI, when it starts turning up, it doesn't turn up for no reason and then turn back down there. So previously, when we've had signals, when the stock RSI turns up and keeps going up, and I think a chart like that also for the Dow, and silver's really like the Nasdaq was like the last stronghold for U.S. equities. It was the strongest.
Yeah.
And when silver starts outperforming the Nasdaq on the semestrial candles, when you have a beautiful arc where the angle of entry, it's starting to get smothered down, and silver refuses to lose value versus the Nasdaq, and then all that energy, usually in an arc, it's the same move going back upwards. So that same energy of the silver being undervalued versus the Nasdaq on the way out there is going to be violent. Just like you have those market crashes, right? It's a reverse symmetry move. All that energy up, energy down. You could apply that, the same thing. Emotions here, peak in the Nasdaq, like maybe 3 months ago, like peak Tesla, peak everything, and yeah, the script is flipping right now.
It definitely has, yeah. And just if you look at this, there's a lot of room for it to run, like the value versus growth kind of trade. And by value, I mean commodity stocks like silver, right? Like,
Yeah, it's can silver go down some more? Sure. Could there be a market crash and so silver drops? But the odds are that if it's at its bottom, it's going to get a bid versus the U.S. equities, the bid. So the odds are on your chance that you're not buying silver expensive. Right now, you're buying probably the tech expensive, right?
Right, right. On a relative level, that's true.
Yeah,
Yeah. So just yeah, looking at that, that's very good to know. And obviously, you don't really make money by chasing things that are already expensive. I don't think that's ever really worked out very well, right?
no,
So
and like most folks or people who don't look at charts, they don't know because you go on Twitter, you go on the news, all you see is the most popular thing is being promoted, but
yeah,
usually that most popular thing, that means it's like the crowded trade, right? Doesn't mean it can't go up and you can't squeeze another 10, 20, 30%, but it's just like a risk to reward. Uh, you're risking to have a 70% drop versus a 10, 20% gain. You're no man's land. You're it's volatile. Where's your sell stop? Like
yeah,
it's a tough position to be like. You have to be early. The early bird gets the worm. It's a cliche,
yeah,
but if you're early, even as soon as it explodes, it explodes. Even if there's a drawdown, you were in so early that that drawdown is not gonna that volatility, that weekly volatility or daily volatility is not gonna hurt you. But if you get it now and then you have a 20% down because you're close to towards the end and it's starting to get volatile against you, man, you're gonna get whipsawed to death. You're at the worst you're at the worst spot presently right now to be in US equities. Even if it goes up another 10, 20, 30%, it doesn't mean that it was the smart thing to do entering at these levels.
yeah, exactly. And like we talked about, the markets will manipulate your emotions big time. And I think another 20% move in equities would just make everyone think that
Yeah.
they're safe forever. They're going to go up forever. And yeah, again, it's the pigs get slaughtered, right? If you try to squeeze more and more gains out of the market. So really, really great. And then one thing that's really interesting, because you talked about how, once these parabolic crashes kind of do correct, there's a lot of technical damage. And what came to mind immediately for me was Bitcoin, because look at that. I mean, that's technological damage right there, right? You could
It's
argue.
it, yeah, it's on life support. So it still has a chance because again, it's a linear chart, so it's skewed to make it look worse than it is. Because if you put
Uh-huh.
on a log chart, it doesn't look that bad. It's still above, let's say, 3-year moving average, and
Right.
it doesn't look that bad. But the takeaway is if you have a parabolic melt up on the linear scale above all-time highs, and then you correct 70% or more, that's the damage. And right now I think it corrected so if it's corrected 50% about, it's trying to hover there. If it
Yeah.
corrects 70%, if it touches that goes back to those 2000 at 20, if it goes back like let's say to 19 or 20,000, stick a fork in it, it's done, man. It's
Right.
there's
Right.
so now it's going to be below 3-year moving average. Now it's going to be below overhead resistance. The psychology is going to flip. The people who got burnt at the top, they're going to want to get off kiff even, or if it goes up 20%, oh man, good. I'll tell my wife I only lost 80% instead of 100, and like all these emotional things that we all went through. That's what happens when you go down 70%. It's like uh, that's why I went down this rabbit hole recently, and I'm going to keep digging out charts. You could see that in the 1920 market crash, 1929 market crash. You see in the dot-com bubbles. They keep repeating over and over and over. And that top at 65,000, it was insane what you'd see in the news there. Michael Saylor and the laser eyes. And when I see everybody with silver eyes, I have to be wary also, the same level. Like if Elon Musk says, I'm going to buy silver and it's going to the moon, uh, if I look at the chart, it's probably going to look like that, right? It
Yeah.
doesn't mean it could have went up. It could have Bitcoin could still go up. It could have went up. It's just that entering at 65,000 or 60,000 was a higher risk proposition of something like that happening, and now you're trapped emotionally. What do you do now if you bought at 60,000 and you're at 35 if you don't have a game plan? If you bought on news and you bought on FOMO and you didn't buy based on technical analysis and stops, you're done for,
Right.
because I can't even imagine somebody buying at 60,000 and seeing their investment go down 50% without, yeah, in the framework, trading framework, you need it has to be built on conviction or a lot of evidence, because when you have those drawdowns, you have to understand where you are in the cycle. You have to understand, okay, this is volatility versus this is a meltdown, right? Like you saw in those ratios, the silver to Nasdaq. Even if I had a 50% drawdown in silver, I probably would panic a lot less than having a 50% drawdown in the Nasdaq, just because I know where I am in the cycle, that it's volatility. It's nothing that's the macro tidal waves should lift it up, higher chances.
Yeah.
But yeah, so buying when you're super extended away from a 3-year moving average, super dangerous stuff to do, man. Super
Absolutely. And
dangerous.
so many people were buying up here, like in the 50s and 60s, like that. I feel like so much money got poured into Bitcoin then, and here it is down 50%.
Yeah, like I almost said, my friends were telling me about all their profits, and I said, "Man, Patrick, am I missing the boat?" I even asked myself that. Then that thought went in 2 seconds and went out the other.
Nice.
But a lot, like it, I kind of came to the conclusion it's not about percentage gains, like comparing your percentage gain to somebody else's. Are you in a low risk, high reward entry point? That's
Right.
all. That's my focus right now. Just making sure that the higher trend will save my butt, and
Yeah.
eventually I'll end up hopefully one day like Bitcoin. I'll be able to have bought at the turning point, and I'd love to like to have a Bitcoin chart eventually for silver, like at the end. But
Yeah.
for somebody who's like has no money in the markets and wants to just like put the odds on their sides,
Yeah.
they need to be aware of these charts or where they are situated, you know.
Yeah, absolutely. I totally agree with you. Like you want stuff that's like really depressed and down. Like look at like even down here in Bitcoin in 2019, Bitcoin in early 2020. That's when you want to be buying things, right? Like when it looks nasty, kind of is when you think
Well,
people are rewarded.
yeah. Well, I put a step extra. It looks nasty, but I would wait for evidence of the chart that the price action is actually setting in higher lows, that you're starting to be above important moving averages,
Yeah.
and that it's you're turning the corner, right? Because you want to be early, but you don't want to be like Peter Schiff early. Sorry, Peter. Like you
Yeah.
technical analysis is supposed to give you that timing a little bit, like give you that edge. So even if something's cheap, you could have bought a Bitcoin in 2019, but essentially you want to have a little bit more evidence that you're getting closer to a turn, and that's it's rare that you catch the bottom. So usually the price action is going to have moved up 50% or even 100% off a bottom, and then when you're setting in higher lows, then you could say, okay, I'm getting close to a strong run up. It's time to position.
Yeah.
But
Yeah. Yeah.
yeah,
That makes total sense. You're right. Because some stuff will go to the floor and you don't want to ride it all the way down. So you want to make sure there's a little bit of like positive movement in the chart. Like
yeah,
even here, you could have bought here Bitcoin, right?
yes. Well,
Yeah.
there's a lot of charts we did. That breakout there was easily identifiable at a 12,000 or 9,000. There's
Yeah.
other charts that a lot of guys did, and that was actually the lowest risk, highest reward time to go in Bitcoin. Not at 4,000.
Right.
You could get a Bitcoin at 4,000. Oh, I bought the low, like for bragging rights, but technically that was a hard sell to say, hey, that was a
Right.
time to buy. But 8,000, 9,000, when there was that breakout, even at 10,000, it's a nice round number. When you had that breakout, that was probably the time it was coiling nicely, higher lows, and really getting tight.
Yeah.
Those are clues you want to. And there was no Michael Saylor back then telling you to buy Bitcoin, or Elon Musk saying Tesla was buying.
Right.
There's none of that.
Yeah, great point. So, oh yeah, just the one thing I'll mention is, so it's great. You're watching to see if it corrects all the way down to 70%,
Yeah,
like through 20K, and that's when you'll say, okay, this thing's probably done. But if it does rebound, right? Because this thing is kind of a exponential mover, and if
yeah,
it does rebound, then you could almost be seeing like see in early 2000 or late 2017, you see how there's some big drawdowns followed by a massive move up.
yeah.
We could be in store for something like that, right?
And
Yeah.
yeah, and it will look like that because it's a linear chart. If that thing goes up, wherever we're seeing now is going to get smaller, and like whatever's close to the right of the scale, it looks always bigger. And you're right, that's a perfect fair analogy for Bitcoin. If it stops now, then in its track, and Nasdaq melts up, and speculation assets like Bitcoin melt up, then that will just be a tiny blimp, and off it goes to 200, 300,000, wherever it decides to go, right?
Exactly. So that's really interesting. So we'll definitely come to you for advice on
But
if it makes a
it
new
still
high.
doesn't make it right. Sorry to interrupt. It still doesn't make it right to entering Bitcoin at 60,000. Even if you get lucky and it goes back up, the reasoning people have to get, it wasn't a sane um entry point there, getting in at 60,000. It just wasn't. Even
Yeah,
if
yeah.
it does, like, the price action going in your favor doesn't justify the reason why you got in there.
Right. Absolutely. You should
Am I
have.
being too hard on on folks?
No, I think it's the most important lesson people need to learn.
Yeah,
Don't chase parabolic charts like this, right?
yeah.
So that's really interesting. Great. And so, obviously we want to play this correctly. And we talked about how silver is relative to a lot of these high flyers way undervalued on a historic basis and when you do the comparison. And so, I do think SILJ is a pretty solid investment just because it's diversified and silver's beaten down right now relative. So what is your thought on SILJ? You put together this great chart. So what's the takeaway?
Okay, so this one is semestral, again, 6 month candle, like super big picture. It's on the linear scale. So I wanted to, whenever it's measured in linear, like I said, it's like measured moves by dollar amounts, not percentage amounts. I call that non-greedy targets.
Okay.
And right now we had a confirmed breakout in 2020, I think. So yeah, Q4 2020, we have a confirmed breakout. So SILJ actually broke out above its 2016 highs, close basis breakout that enacts the measured move. So I have a linear measured move that of $9.61. You add that to the breakout line, it brings me all the way like to 24 or something. And then you could estimate the angle of ascent if it continues in that trajectory. And since it's a linear angle of ascent, it's a non-greedy. So it's easy to maintain a linear angle of ascent versus a logarithmic angle of ascent.
Yeah.
And it gives me like a $24 target, maybe it's hard to tell there, maybe in 2022, even maybe this year, maybe Q2. Yeah, maybe this year or next year, probably going to be hitting that target. You could have a wick, which is noise. So this is like on the monthly chart, daily chart, we could have an insane wick going up. But if it gets too extended, it's going to get sold into. But if the longer macro trend is upwards, it's going to look like this. It's going to slowly build up. Look at that wick in March, how it got sold. But at the end of that 6 months, if I would have put a line chart, you could barely see that wick from that 2020 March low there,
Okay.
that market crash low.
Yeah.
A lot of people got whipsawed. A lot of people got destroyed. But if you would have just been on the higher time frame, and you wouldn't have been leveraged, and you would have understood that there was a change, that we were going into a commodity cycle versus U.S. equities, then you could have probably held on, and then you see it's just slowly rising nicely, steady as she goes. So until that changes, and until we start getting closes below that breakdown line, that $14.67 breakdown line, and we can't maintain this ascent, it's all noise, all noise.
I do love that lesson because like people don't, and I didn't realize wicks kind of are just noise, right? When you're looking at a candlestick chart, just kind of look at like the candles and a lot of this stuff is kind of noise, but the long-term trend is what you should be looking at more so.
Yeah.
Right.
Yeah, a lot of folks, like, they put line charts. You could put line charts, but it's good to see the wicks, because so like you could come to that conclusion, like you just came there. It's showing you the noise. Like a smaller time frame's close is a wick in a bigger time frame, and yeah, there's a lot of signals on smaller time frames. Oh, have a daily breakdown, but then when you zoom out, you see nothing's broken on the monthly chart, nothing's broken on the quarterly chart. So you have to decide: are you a scalper, day trader? Are you a position trader where you want to ride the wave?
Mhm.
I think investors, that have to decide that ahead of time, so they don't fall to those smaller time frame breakouts, or
Right.
or breakdowns.
Absolutely. And, you know, I'm a long-term investor, and that's why I really look to long-term charts, because that's, if you're in it for the long run, you want to see the big pattern. But something that actually really excites me, I would love to get your thought on. So SILJ. So look at this. Look at this chart. So ever since March it bottomed, and it just, look at that basing pattern and how it's just breaking out. Does that look good to you, or no?
Looks awesome.
Yeah, I know. Yeah.
Well,
Yeah.
I did a chart back. I forget where or when, but that is an analogous move. It's like a fractal. It looks like what silver did in the 70s. So in the 70s, silver had a strong move up,
Yeah.
and then the real rates bottomed down, and then it went sideways and did like that, like a little moon. But then after that, always higher lows, crescendoing up, tight. Nobody,
Right.
lots of wall of worries, trolls rampant.
Yeah.
Nobody wants silver. The price action is telling me right now that it's really trying to crescendo up in something magnificent. I'm sorry about the words there, like, but
No. Yeah.
it's right now until the price action, until this breaks down, it's making higher lows, it's coiling up, and it's actually above breakout lines. You could draw multiple breakout lines, angles, and even horizontal. Now it's above that. You saw in the 6 month chart that it already broke out.
Yeah.
So this is a melt up waiting to happen in the SILJ. Yeah, it's like written in the stars there that
Yeah.
a higher probability of that happening than a total meltdown at this stage. And since, like you saw those silver versus Nasdaq charts, capital flows haven't even started really going in silver yet because of that racial chart. And like with all that evidence, yeah, this is something special brewing right now there for
Yeah.
silver
Absolutely.
juniors.
Yeah, that's just so exciting. It just looks like a rock solid, nice trending pattern there.
Yeah.
And then, so just one other one that is really hard. So I spoke to Steve Penny, and he feels pretty convinced that this could be a breakout in gold, because right, ever got excited back in July 2020. Since then, you know, it's been a rough period of time with just downtrend. But here we are, like, back up in gold. Does the gold chart excite you too, intermediate term?
Gold, it really corrected severely. So silver really, the chart like barely has any scars. It kept doing higher lows like during that 8 months. But gold, it did like, if you would zoom out, I want to show you the 2008 dip. What we have right now is pretty analogous to what happened in the 2008 crash. So in percentage wise, from that peak in 2007 to that, and then that crash from there to
Yeah,
there.
you're right.
And I've done a whole bunch of studies like with noise reduced charts with Renko and whatnots. And we had, independent of the narrative, we've had that type of correction. But that chart, that section also, if you really want to get scary and have the bearish case, it's looking less and less like it, but it could have looked like that 2011, 12, 13 top. So where gold set in, but I know the racial charts, the weight of evidence is completely different. Back in 2011, 12, we were severely outperforming let's say the US equities, and that was buying gold. When you have a parabolic melt up, when you're like in those racial charts, then those are clues that might be the last blow off top.
Yeah.
So the weight of evidence is completely different. But if you would just look at one chart and you didn't look elsewhere, there were some analogous previous move where this could have been a top for gold. But as long right now the jury's out,
Okay.
gold has to close above, let's say 1950. It's if it closes above that, it's pretty much safe. And if ever it goes back and has a monthly close above its all-time highs that it did in August, then it's game on. Because you see in 2013 the tops, it tried to do it twice, never able to.
Yep.
After that first parabolic melt up, it tried once, it failed. It tried a second time, it couldn't even beat that previous high. But
Right.
right now, where we are, we're already above the previous smaller peak,
Yeah.
below those 2050 highs. So it's
Yeah.
already showing a lot of better bullish construct right now. So yeah, Steve's right. It's there's on a lot of angles, and especially considering the way silver is behaving, it's not breaking down, etc. You have to put the odds that gold will eventually overcome those highs. And it's actually good that's kind of slowing down because silver has a lot of catch up to do. So gold for me, as long as it keeps trending higher and doesn't make lower highs, it's still game on there.
Yeah, no, absolutely. Yeah, so it makes sense. The odds are favorable that it's going to break out to bullish, but the jury is out, because if it does do a correcting move like it did in 2012, then we could be in for more downside.
Exactly.
Cool. Okay. Great. So then, a lot of subscribers to this channel are really big into uranium, and I know you've done some charts on uranium. I know you've looked at Cameco. Is that one we could look at
Yeah.
together? Okay. So let me just look that one up, because that's kind of the big dog, or one of them in the uranium space. And I think on your website you call it the Energizer Bunny. So could you break that down a little bit?
Yeah. Forget yeah, because it keeps going and going. And right now it's had a pretty strong move. But what I want to show is based on past behavior, like in 2004, maybe, or three,
Mhm.
it kept going up. And when people thought it couldn't go up higher because it got stretched technically, it went ballistic in 2000. Yeah, maybe four. And it did it twice. So it's pretty much programmed in its DNA to behave like that. Just like silver's explosive moves, it has
Right.
done 8 or 10 explosive moves and then corrects violently and then
Yeah.
sideways and explodes when nobody cares.
Right.
I put chemical in that same type of pattern. So every time you've seen that it went up, it always liked going up vertically before putting in a meaningful top. And yeah, honestly, the best time to buy it is probably not now. It was like a little earlier, where there's clean breakout lines.
Right. Like they broke out of the basing pattern here.
Yeah, right there. So yeah, you see right there, and it retested. So you could break out. So on that
Yeah.
way up, on that line up, yeah, that was probably the
Yeah.
time to buy. You have a nice horizontal breakout line.
Mhm.
Then on the retest in that lull right after, and I think that's probably the March, the Feb, yeah, the January lull. Those are probably your two best times to get it.
Yeah.
But it's in an uptrend. So if you want to know, if as long as it's above a 30-week moving average, you hold on to it. So let it ride until once it closes below 30-week moving average, or if you want, you do it like a trader's way. You want to get out fast, you could take profits. Once it closes below 10-week moving average, you could get out. That's like Stan Weinstein's basic premise there in Secrets for Profiting in Bull and Bear Markets. Super simple system. If you're above an inclining 30-week moving average, you're generally in the stage 2 ascent, and you could ride that for years. Who knows how high this thing's gonna go?
Right. No, absolutely.
So
It
why
does.
take profits early while it keeps riding up and up and up,
Yeah.
and let the price action tell you when the ride's over.
Yeah, that makes a lot of sense. Exactly. Because some people are scared to get in this high because the uranium's already moved so much. But yeah, just listen to the price action, essentially,
Yeah,
right? So yeah, Camco, the Energizer Bunny, you have this great long-term
there
chart.
you go.
And yeah, so what is your quick takeaway on this?
Yeah, this is like a 6 month candle chart, and you see I have I don't know what moving average, 12 periods. So that's a 6 year, 6 year moving average. And you just broke out of that base last in Q4 of 2020. And you see the stock is just turning up, and there's a lot more room to go for anybody who's already in. There's a lot of room to go for somebody who wants to day trade this or wants to get a better entry. They could probably on the smaller time frames wait for better timing. But if you look back at the 2000 run, it was just nonstop. You
Yeah.
could see there's some wicks noise from the smaller time frames, but overall, it had great years, great semesters after semesters, all the way up.
Yeah,
Uh,
no, I
I'm
see what you're saying. So it's kind of in a bull run right now, and it's similar to a prior bull run, and it could correct, and you could get a better entry point.
So on the smaller time frames, I did this a while back, but you are hitting some type of what I call a wall. So that previous support is
Mm,
now resistance. So that could end up being a wick by the end of June. I don't know how it's looking now, but it's not guaranteed that we're going to close above that 1745 like next breakout line there. That's going to bring you to 50.
mhm.
But anybody who's in, the ride is not over there for Cameco at all. Even if you think you've doubled your money or since you've got in, and for me, like the $50 target is that I'd be aiming for that there if I was in Cameco.
Okay, great. And just the one, it's just really important one that you did was base metals, because this includes everything, right? Copper. It seems like we've had this massive spike up, and it's hard to know what to do with that, because is it overbought? Is it oversold? And this does include, look at all these commodities: uranium, tin, iron ore, cobalt. So just looking at that, because a lot of people are invested in copper right now, and this does, it's really similar to the copper chart actually. So what is your takeaway on kind of this base metal complex chart?
Well, in the precious bull market, commodities bull market, the gold was the first one to break out, like in 2019, and after that, they're all taking their turns. The gold led the way, the floodgates, whatever, inflation, monetary imbalances. So anything that's hard is gonna be like valued more.
Mhm.
And yeah, they could slow down, but now they took the gold opened the, because remember, gold's above its all-time high, so it's way ahead of these guys. These guys are just catching up, just like silver's catching up.
Yeah.
The target for this one is really those previous highs. So until that hits 236, this is probably a hold. But
Yes.
if you want right now, entering at this stage, you're probably close to some resistance. So it's probably a tough entry right now. The best entry again, it's where I put the marker there on the when you just bounce the right hemisphere of
Mm,
the arc. That's when you confirm it. So I had the first bounce at the
yeah.
bottom in 2016. That bounce right there, once you start moving back up, that's probably the lowest risk entry. That's when you had to get in all these type of metals. It's not at $4 necessarily, because what's good for Bitcoin is good for these charts, right? If I would look at them individually and I had distance from moving average and I'd see I'm historically far away, you're better to go in silver where it's still relatively close. There's other assets you could look at that are in the commodities bull era that will give you better risk versus reward.
Yep.
But for somebody who's in, you hold all the way till you hold to the top. But somebody who wants to enter right now, you're right. It's like kind of a no man's land, because you'd have to go on smaller time frames to see where's my support.
Right.
But this could at this stage right here, it could stop in its track. It could go retest that neckline of where I have the like the water filled. It could go
Yeah.
retest
Yeah.
this. It could come all the way back, retest the arc, and then shoot up crazy. So
Yeah.
let's say there's a liquidity crash, a market crash. That's how the chart would look at. It will bam crash down, and then after they open the spigots, like trillions and trillions, whatever, it's gonna go skyrocket. So that's why it's dangerous if you enter here. If you have that type of pullback happen in the next 6 months, let's say you think the Nasdaq is going to crash, emotionally, it's going to be super tough, right? So
Absolutely.
the entries probably not the best entries right now. A lot maybe fear of missing out, catching up,
Yep.
but so you're better to look at maybe silver or other assets where they're coiled. Silver junior miners, nobody's talking about them except my Twitter feed or a few other people. That's probably where you have better risk versus reward than copper and all these metals.
We covered so many great charts, and this is just so helpful, definitely to me, because we can listen to the macro all day, right? And they could say buy commodities, but if the prices do something else, then we could be kind of lost. So this is a great guide. It's just so helpful. So thank you so much for coming on.
It's my pleasure, Elliot, that you considered me there to talk with you a little bit there. I like to ramble on sometimes there. I could ramble on for hours, but no, it was my honor actually.
Oh no, thank you so much. So, and we just scratched the surface of what your website has to offer, and I just signed up, but now I like to go because I want to, again, there's a lot of news, but technical analysis does help guide us. And is that kind of your take on technical analysis? It kind of helps keep you focused on what's actually happening.
Uh, I love good conversations with my father-in-law debating why nickel's going up or down or
Yeah.
whatnot. But it's noise. It's fun. It's emotion driven. It sells newspapers, but you got to look at the price action, because that's the like we've shown the news about buying something. It's too late, and when you should be buying, nobody's talking about it. That's when you should buy before it explodes, and it's normal, right? There's no price action, price not going up. Why would CNBC talk about something that it's like not moving up, right? So the only way to get those deals, unless like you're somebody who scrounges the internet and finds these crazy things that nobody's talking about. The chart is like, you will look at it right away. You see, oh man, the price is low. It's bottoming. It's starting to turn up and nobody's talking about it. It's okay, go low risk, high reward. I'm in. Super easy with charts, you know?
Absolutely. Yeah. It's just a great guide. And just because it lets us know kind of what to expect instead of just saying, oh yeah, there's inflation, right? Buy gold. I mean, it can make you go crazy, especially if you've been investing in gold for the last 10 years. So, yeah. Well, anyway, yeah. Again, huge fan of your website. Thank you for putting all that content out. And that's northstarbadcharts.com, right?
Yes. Thank you very much, Elliot, for the shout out. I'm happy you appreciate it. And hopefully it's like a one-stop shop, easy to search. All the charts are there. You could search Kevin, me. We put tags, we put categories. And yeah, even I use it for my own stuff. It's easier to find. Sometimes I'm on Twitter, I'm trying to find my past charts and it's a total mess because I didn't use a correct hashtag, whatnots. But on the website, we control the labels, the tags. So we know it's clean, you know, it's like a database. It's easy to find stuff.
Yeah.
And yeah, no, it's hopefully that's going to be a great database. And even my long-term charts, they're in there. They have value that lasts a long time, right? Because it takes 6 months to add a new candle. So a lot of these charts, these different viewpoints, they're good for years. Like some of my early charts, they're going to be good for decades almost. So they're all there in one spot. And
Sure.
yeah.
Yeah. And you put them out almost daily, right?
Daily. And right now, like, I don't know how many hundreds of charts we have there. 5, 6, 7 charts pretty much these days that we're putting out daily, sometimes even more. So I didn't even realize I was doing that many charts there. But once you see them in one place and you filter per date and say, man, what, I did 5 charts already? Because as soon as I have an idea, it's a chart and all the members, they get access to my idea. I don't hesitate. I have to go up, like put it there. No, it's the website. There's people that are, they're paying, they want to see that value. And I don't even hesitate. Some even of my preliminary brainstorming work, I do a chart, I put it there, and hopefully it helps people get some early insight there.
Absolutely. And people can also follow you on Twitter, right?
Yeah, Bad Charts One. I'm there also, and yeah, follow me there. It's a great place also to get information for sure.
This discussion is for informational purposes only. Nothing in this discussion should be taken as investment advice. Guests are not compensated for their appearance. Do not base any investment decisions on the information presented.